Good morning, traders. This is Carlos, CEO of GAR Capital. It is 6:32 in the morning, Monday, December 5th, 2016. This is the second take of our weekly preview video. Last night I went ahead and recorded the video. Looks like the sound didn't work. Technical difficulties. Tried to get the audio to work, it didn't record. So this is part two. And might as well just start now where the markets are open, London is open, and we're already rocking to go. So let's go ahead and get started here with our check of the markets. All right, 6:33 in the morning. London is and Europe is ready to rock. We had the Italian referendum, and as you can see here, no effect at all. DAX is up 1.6%. 50 is pretty flat, but for the most part, Europe is shrugging off the referendum. Now, what do we go from here? We were short euro yen. It fell all the way down. Oh, get this over here. Fell all the way down to 119. We were up for a bit. Then euro just shifted up as it caught a bid to 122.23. It stopped us out. There is no real rhyme or reason why this happened. It's just the markets and how they work sometimes. Things catch a bid. Currencies catch a bid. There's no fundamental reason or technical reason why that jumped up. We were going to go ahead and move it to break even, but we wanted a little bit of more room to let it roam, as we thought maybe it would jump up just quite a bit. This was our entry point on 121.80, but right here we would have been stopped out, and we wanted to get a little more breathing room. Unfortunately, this is the way the markets work. We've been getting a lot of big swings lately. As swing traders, we have to be very vigilant on these kind of certain moves. With that news, euro dropped about 200 points against euro yen and about 150 against the euro dollar. A little bit of news here. It looks like dollar's taking a little bit of a hit. If we take a look at dollar yen, it's taking a little bit of a hit. It's been pretty flat due to, I guess, Fed freezing expectations that the Federal Reserve will only raise rates in next week and then just hold from there and not raise any more. I don't believe this to be true. I do believe that we'll get steady rate increases as we have stronger and stronger data, employment data, GDP data, and inflationary data moving forward. A couple of trades I'm looking at. Dollar, Canadian dollar. A little bit drop today. Oil is rising, so let's go ahead and take a look at that correlation this morning. All right, oil this morning is rising. We'll go to a 15-minute chart. As you can see, dollar Canadian dollar is pretty much flat, 0.01, and oil is up about 2% since today's session. As you can see, the correlation as dollar Canadian dollar drops, Canadian dollar gets stronger, oil rises, you see the difference. We'll see the divergence here right around this point in the beginning of December, but this is just a comparison chart of the commodity and dollar Canadian dollar. I'm going to take a look here exactly where it's trading. Trading at 1.7. This out here, 52.13. Let's take a look at the technicals here on oil. We're still expecting to the bear side, to the downside, as we feel that it is already hitting its peak. But looks like it does want to break that resistance on a weekly chart. Right here, there's a range. Ever since the summer of 52 has been that resistance chart. But as you can see, definitely to the downside. So we have been expecting it to go back around $42 a barrel. But right now trading at 52, that would be a $10 drop. We don't expect it to happen overnight unless we get some big news of any other country not accepting the production cuts for OPEC. But from the moment on right now, it looks like OPEC is trying to stabilize prices around the $50 or $60 range. The next resistance point would be about $60 a barrel. Let me go ahead and put a line here $60 a barrel right around July, summer months. That's the next point. Do we hit that on a daily? 52, we don't have enough space. See, that's on the weekly. Could we get that rise here? I don't expect that to rise around 60, and if it did, it won't happen in the winter, as winter oil consumption is usually lower, a lot lower than the summer. Summer months tend to be the highest consumption of oil in the United States, which is the biggest consumer of crude oil in the world. Just want to keep an eye on OPEC. Wednesday we'll have crude oil inventories, and we'll see exactly where that moves in regards to the oil markets. 52.19 is their current rate. I am still bearish on that. That's why we are long USD CAD. Right now it's around 133. We're down a couple of pips on this one, so we're just still waiting to see. Other trades that we're looking at: Aussie dollar. We have the rate decision. Let's go ahead and get back here. I'm gonna leave the last video open, even though they didn't have sound, but you could see how the pop in euro dollar changed the markets basically. Yen is taking a hit, so definitely we're starting to see more of the risk off movement. As the yen is taking a hit, dollar is rising against it, and the euro dollar is rising as well. And pound has also just been the big winner the last couple of weeks. We got stopped out on pound dollar as well, as it's just been rising all around. Cable has been one of the bigger winners. It's been the biggest loser this whole year due to Brexit. Let's go back to Monday. Today we have service PMI. Pound beat that, which brought a little bit of a rise in the pound, just kind of add a little more fuel to the fire. Retail sales in Europe beat 1.1 over 0.9. We have Eurogroup meetings all day, not expecting much. FOMC member Dudley speaks today. William Dudley out of New York. Again, probably more of the same. The Fed's going to go ahead and raise rates. Nothing new. 10:30 tonight, we have the RBA rate and cash rate statement. We'll keep an eye on Aussie dollar. With that being said, let's go ahead and take a look at a daily chart here. Pretty much range bound, 74 to 76. We had a little bit of a drop, but are we expecting a drop? Let's go ahead and take a look at a weekly. Still bearish against the dollar on the weekly. 4-hour chart, same deal. Still bearish all around. Are we expecting a little more of a drop? Could be. Want to see exactly what the Australian Royal Bank of Australia says. On this chart, I am looking at a target around 73.80. Not too much to make a difference, about 40 pips. Not enough to scalp. I wouldn't want to scalp on this anyways. But I do want to see where the Royal Bank of Australia goes. If they cut rates to about 1.25%, we could get a rally to the downside. But as you know now, especially with any kind of news, referendums, central banks, looks like the market just wants to dictate what it wants to do. Let's not predict here. Let's just go ahead and keep an eye on the market and see if we can react. Now, in regards to the euro-yen trade that we had, it was leaning towards the referendum of no, which we got correct. But the euro rose against it afterwards. Why? We're getting a popular sentiment all around the world. What does that mean? We're getting more of the stronger borders, more nationalistic view on the world, less UN, less European Union, yes, less collective, excuse me. More and more individual countries want to go ahead and run their countries their own way. More of a popular sentiment, meaning populism. Trump sweeping into the White House, Brexit, and all these things have come together to show the market sentiment of creating the populist view of the world. I don't think the European Union will dissolve tomorrow, but definitely has more pressure to the European Union, and Draghi will have to address these issues moving forward. That was basically based on pure confidence. Will the euro be stronger against it, or strengthen, or keep these countries available? Will there be referendums on leaving the European Union? That remains to be seen. Okay, so let's go ahead to Tuesday. Another image going on in Canadian dollar trade balance. Australian GDP on Tuesday. Canadian dollar, Canada is going to have their overnight rate. It's 0.5%. Don't expect that to drop at all, especially with oil rising as well. That helps their economy. We have ECB press conference on Thursday. Don't forget that we also have Wednesday oil inventories. Minimum bid rate in Europe. Still rates are around zero. And Friday we have University of Michigan consumer sentiment. The big week is next week, which is the federal FOMC federal funds rate at 2 p.m. Of course, we'll keep an eye on that, and we'll go over that next week. So those are the current trades we're looking at. So let's go ahead and make our list, just like always. Let me go ahead and bring up Microsoft Word, and we'll go ahead and type it up. Okay, things to look for. Excuse me. To look for. I'll say RBA rate statement. "25 basis points. Keep an eye on bearish sentiment. Keep an eye on euro as well. Keep an eye on euro USD. See if it breaks resistance on 1 hour chart. A little more space here. Give me a second, guys. Of course, always oil. We're trying at 55. See if we can break 58. Levels increasing. If not, expect return to summer levels. Okay, other thing too, for all my gold traders, I wanted to go ahead and go over this with you. I want to go over the correlation of gold against interest rates. So here is your gold trade. Gold right now is trading at 1167. We're going to go ahead and compare it to US Treasury. So 10-year yields. Okay, there you go. Just like the oil markets, just like the oil markets in USD CAD, we see the difference in the divergence and the inverse correlation of gold and bond yields. When bond prices drop, yields rise. So you can always do this. If bond prices fall, gold will fall with it. If US bond yields rise, which is easier for me, when bond yields rise, oil drops. So you can almost have a leading indicator, as an example, or kind of give you a little bit of a hint of where gold will go against it. Let's go ahead and check Bloomberg and see our current 10-year rate. Moving forward, and when is the next auction? I believe it's this week. But you can see this chart here. Give me a second, guys. There you go. You can see this chart here. Let's go ahead and move it over to a 4-hour. There you go. You can honestly see this rally here. Drop and rally since the 7th of November, right at this point, and boom. Right, if you would have got in here, right around this point of this bond rally, you could have shorted gold and made yourself a nice little spread. So let's go ahead and take a look at fixed income. Fixed income, for example, guys, is always bonds. Let's look at bonds. So 10-year yields 2.42%, highest it's been in months. Remember, we were trading around 1.6% just recently. So ever since the election, we've been getting 10-year rates rallying against it. That does bring up mortgage rates across the board for consumers. Definitely an inflationary response. Definitely, I believe that alone will show that is a reflection of the Federal Reserve raising the Fed funds rate. So also with the Fed funds rate, we'll also get a short in gold. Gold will drop against it as well, as you can see here, 4-hour chart and a daily chart. As a daily chart looking here, we haven't hit these low points since February 2016. Do I consider still dropping? Yes, I do. As long as bonds continue to rally, I do believe gold will drop as well. So gold, short, target. Let's go ahead and target here about 1140. I think about 1140 by this week. 1140 this week as bond yields rise. US yen, dollar yen. I do believe I'm a little more bearish on bullish on dollar yen. We had a little bit of a drop, a little bit of a hit, but still rising against everything else. 1-hour charts, getting a little bit of rise, 114.29. 114.60 seems to be the resistance on a 1-hour. On a 4-hour, still rising. Check exactly where we're at 15.28. So still bullish. I still want to see a little bit more of a rise. I don't want to scalp here. I think 114.60 seems to be the right number. But I don't want to just close out there, obviously. I want to earn a little more. So 114.28. Oh, right around the daily, we're getting hit in that resistance. If we can break around 114.80, we can also get a rally. So let's go ahead and watch for a 114.8 rally. So rally to break resistance. That should get us around 115 past it. Shorts will be squeezed to 115 handle. Alright, so guys, those are the main things I'm looking for the week. Again, I do believe that the market should have a little bit more of a pause all around due to the Federal Funds Reserve, federal rate hike or rate discussion next week. All eyes will be on that. You better believe all market sentiment will be based on that. Prepare for CNBC to talk ad nauseum about the rate hikes. What will happen, will it not happen, etc., etc. So most things will be on hold until then. Euro dollar, again, rising right now, pretty high. 107.02, we broke that. So 200 pips swing since the referendum. So if you guys short here at 105.23, a lot of stops. Euro has eaten a lot of stops. So I'm looking here to short the euro against the dollar. That's another play I want to have. I wouldn't want to trade it today, but if we can get back down to 106.80 on the hourly, 106.80, we can definitely short. I don't want to put the limit order as of yet. I still want to keep an eye on the market to see if we get that level and see where the market sentiment goes, if we get more news as we go along, as we have the Euro meetings continuing. So guys, those are we're going on the meeting. If you have any questions, feel free to email me. Go ahead and write the email. Of course, as always, we'll go over more together. I wanted to show that gold correlation with bond yields. I don't expect bond yields to rise sharply at all this week. Again, a lot of it's on hold. I don't expect a lot of volume as well in the markets. I think the Dow and S&P should taper off a little bit. We should not get triple point rallies in the Dow against any kind of issues. We're not having any earnings of yet, as the quarter has not ended. Any kind of big blue chip stocks anyways. So we should expect a leveling off in volume as everything, all eyes are on the Federal Reserve. 25 to 50, 25 basis points is the expectation. 50 basis points would be just cherry on top. So again, guys, if you have any questions, feel free to email me, and we'll keep a look at the markets. Again, euro yen stopped us out, unfortunately. Big time reversal against the markets. It looks like a lot of people were hit on that as we saw that rally on that squeeze. Just want to show you what I mean by squeeze. If more clients or more institutions were short euro dollar right around here, say for example where this candle ended, that means in order that stop out, they have to buy that currency, because it'll be considered a buy order. That considers that sharp. So when stops get taken out, if you were short, you buy. If you get that keep going, that effect, you get a squeeze. So this would be a long squeeze, and consider that, and it creates that rally. Yep, this is the markets. This is what we do. We just have to dust ourselves and move back on and keep grinding. So again, we'll go ahead and move from there. Yeah, if you guys have any questions, feel free to email me. Thank you so much for joining me this morning. Sorry about the issues with the audio last night. I make sure to correct that. Try to re-record, but it didn't work. You guys have a great day, and thanks for joining me, and we'll see you the rest of the week. Have a great